The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Good Lord, it's cold in North Carolina this morning. Hope you guys are doing okay up north. I know the snow wasn't as big as it was supposed to be, but whew, amazing. Middle of March, huge snowstorm. So me crying down here is not any type of thing you guys are going to have sympathy for. Here we go. Let's take a look at Apple. New scanner here. Everything should be hunky-dory now for a release. Finally, got some tighter restrictions here, and we are by Friday coming out with the opportunities matrix on this. But I'm going to go ahead and release it today, and we'll have an upgrade. So new look and feel, nice and nimble. But let's take a look at Apple really quick. I wanted to kind of focus on that this morning for a second. Here we go. Somebody's saying it's 2 feet. Where are you at, JB? Boston? Here we go, Apple. So again, this is, we look for hints like this when these orange bars appear. We've got one in Apple right now. Don't get too super excited about getting short the stock. What this means is we're probably going to have a new supply area happening in Apple. And what I did here is when I go into my dashboard and I look at Apple, you know, you can see that yellow peel back happening. So if I wanted to really kind of focus on that, what's going on in the weeklies, that's pretty decent amount of stocks there. And as you can see, the S&P itself at the same time, I'm going to go back to that chart. The S&P itself is also trying to emit this yellow peel back sign. So you've also got a Fed meeting today, which is no mystery to anybody. And I think you've got a possibility of a half-point raise. That would just completely blow the markets out of the water as far as volatility goes. But you've got a % chance that would happen, albeit small. I mean, they're looking at raising a quarter point. There's no mystery of that. And 3 rate hikes are already factored into the treasuries. But might not be a bad time to buy some lottery tickets on the put side. And Apple has kind of decided it wants to put in a new supplier along with the SPs, along with quite a few other stocks. So let's pull this up. Not too many, 6.5% on the weeklies. And when I look at the dailies, it's even lower. So a lot of stocks just sitting in the balanced area on the weeklies and dailies, just kind of waiting. But I think it's going to be kind of a sell the news situation either way. So I think the edge here really is to look at, and I don't recommend rolling the dice totally before the announcement, but you know, if you wait and we get any types of rallies or just kind of moves up, I you know, if I'm a day trader, I wouldn't mind have some resting orders up here, OCO orders, if conditional, if hit on the short side. Also having that stop immediately above. I mean, give yourself a little room. There's always some knee-jerk reactions if you're trading ultra short term here. But the long-term harbinger of bad news for the S&Ps and or Apple continuing to go up is kind of the stakes in the ground here. And that's kind of cool that the S&Ps, and we're kind of flashing that right now. There's Apple. It's not locked in again. But just a hint of that happening is pretty cool. We're going to take a look at, and this is Tesla. And this is why we talked about, let's see, we're trading 258, looks like this morning. Yeah, we're printing this morning. This is why it's difficult to short this. Had a new profile appear this week. Talked about 243.44 being the bottom of that profile, and lo and behold, we're already above the top of the. On it. Let me look at the weekly. Sorry, that was the daily. 241.53. Sorry about that. The weekly unfair low holding. That's why it's difficult to short this stock. It just goes up 16, 17 points in one day. Here's the daily. And this is why sometimes it's a great idea if you're kind of playing around with inflection points to get confirmation that we're going to head lower. This week we reached a low on this stock of 242.78, and that 242 rounded up. Whole number down below on the weekly unfair lows held. So you can see how powerful these things are. And sometimes it's better to wait and see if something goes lower to short it, and this was definitely the case. Let's take a look at November beans. So there's a couple of different camps on what's going on with beans, and if John from Philadelphia wants to call in, he is always welcome to talk about these grains. Just incredibly good information. 981 and a half, let's just say, unfair lows on the weekly. You can see how this November contract is acted relative. And again, we're not painting these things after the fact. This profile was known that day. And actually, the profile actually started this day, even though you don't see that there. We just don't show it locking in until we complete a cycle of a yellow bar there. So it was widely known. It hadn't totally completed any type of move down here to kiss this 981 and a half area again. But what do you do with it now? I mean, I've got some friends that think these things are going to $8, which I find that hard to believe that anybody would think that about soybeans. But they're in it constantly, like they breathe it 10 hours a day, and they talk to a lot of people. But here's the daily right now. So we've broken down. We're kind of rallying back up into $10 a bushel. That's a big whole number psychologically for everybody. You guys know that. But what does this thing do now? I'd love to hear some fundamentals about this. Somebody's asking me in the den, what could go wrong here to make these beans fall apart or rally. I don't have the research like John from Philadelphia has. I'm just looking at the technicals, and it makes it, I don't really trade these things until they come into some major inflection points, and we kind of missed that 981 and a half again here. So, how do you trade it right now? If you forced me to trade it, I would say that we'd probably complete this down to 981 and a half again, and probably even lower. So, and I'm mixing in a little fundamentals there. I mean, there's a lot of talk about. We'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys. Excuse me. So we were talking about November beans here, and what I was going to say is, oh man, wrong symbol again. Here we go. CS. What I was going to say is, I think the Department of Agriculture is saying the Brazilian crop is even bigger than it was supposed to be, and it's going to dramatically slow down exports right now. But how does that affect November beans? There's a little bit of an arbitrage there, but it's relative to all the kind of overhanging supply news. I think it's holding up pretty well, but I do think we're probably going to at least revisit this 981.5 and probably lower. So I would bank my stops above $10 based on your appetite for risk. Excuse me. Remember, we kind of broke down. We've already revisited this area a couple of times. I don't even know if we're going to see it again, but I think technically we could probably revisit those lows. Excuse me. Here we go. Let's take a look at the 10-year and the 30-year right before the announcements today. This is the weekly, getting a little bit of a ramp up this morning. But all we're doing is kind of coming back and kissing this 123.10 area. That was a big number before on the 10-year. I think the risk here probably is to be long before the announcement. You've got a great area to place some stops, but again, let that report come out. And we could see a half point. I think seeing no raise is like almost impossible. Excuse me. But that's the big number to pay attention to, 123.10 on the 10-year. The 30-year, this is where we're at on the daily. We've drifted pretty low. We've eclipsed recent lows on the 30-year, so kind of going into a whole new paradigm. And how do you trade this? Again, I think you let the announcement come out. These are the 240s kind of breaking stride here, but I think the easier trade might be the 10-year on that. And I'm also looking at the S&Ps having that new supply area happen on the weekly there. Higher rates. We could have kind of a double bearish situation here in treasuries and the broad U.S. stock markets at the same time. So that doesn't happen that often. It usually seemingly is, the inverse reaction, but I don't think we're going to have that now. Gold, excuse me. Gold is, we were kind of waiting for reasons to try to buy this again. Here's the weekly on the April contract, and here's the daily. So there wasn't any reasons to try to buy it before. I think you've got some reasons now around 1,200 to nibble. We've got a new daily profile. The targets up top are 1,217. You always try to look at risk-reward scenarios on a product, and I think you probably got something relatively attractive here. I think gold could just do one of these spikes up in a 1,217 bare minimum just to do it. Taking a look at the dollar. As we look at this, obviously, a lot of commodities are related to it. Here's the, we talked about some targets down below 180. I think we reached a couple of days ago, 186. So, what do you do with the dollar now? All dependent on the rate situation. If they raise rates a half a point, you'll probably see this thing just completely do a moonshot. But everything's factored in right now. We're kind of sitting at the middle of a profile. I don't really see a lot of edge here trading the dollar. Taking a look at crude. Okay. This one kind of disturbed me getting below 52.43, but that's what stops are for. Had a chance to pick a battle down here. That didn't work either last week. So here's the daily situation. Here's the weekly. You kind of like done a little bit of a key reversal back up into this point. I'm not so sure, the dollar could rally here if they do something weird at the coming out of the minutes of the meeting. So what do you do with crude in that case? I think you just wait and see if we get a weekly close back above. I know this is not what you want to hear for trading crude today, but I think you want to see how this thing reacts and if we can kind of get a weekly close back up in the balanced area. That would be pretty powerful for another move back up in crude. But right now, it's kind of scary to get too deep into any of these things with this announcement coming up. The XLF, you got to figure that, as Steve was saying, here's the weekly on the XLF. You got to figure that this particular sector doesn't mind having higher interest rates. They make a lot of money off the yield curve widening. So 24.57, we've kind of defended that area, daily unfair highs. I'm kind of with Steve on this. I don't see a lot of ways to go wrong, even though there's a lot of high, massive moves that have happened in some of these stocks. They could go higher, and this is not really exactly one of those, kind of reversal type actions. Is kind of move up and then kind of shelve off and sit on the launching pad again for JP Morgan as well as the XLF. But you got a really good place to orient stops now on JP Morgan and XLF. A lot of bank stocks, 9104 unfair high there. And if you go into the scanner in the ETF section and go into the, what am I doing here? Financial sector. You don't see a lot of you don't see a lot of reds here on the weeklies. GGP, Kimco, our buddy here, that's gotten hammered. that was one we talked about, kind of an easy short to really orient stops based on some of these weekly inflection points. Let's look at this one. There haven't been a lot of stocks you could short out there lately and feel pretty good about it. This was one of them. KIM, if you remember, I think Tom and I were talking about this a couple of weeks ago, 24.45, just kind of basing some stops around there. And if the market stopped going up, I mean, a lot of these weak stocks were just poised to go down. So anyway, we'll be right back.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new market-safe core commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. We were talking about the utilities. Oh, let me get the XLF up here. XLF, or excuse me, XLU. Not enough coffee this morning. We were talking about the utilities the other day. There's the weekly, the daily. Still a couple adjustments we need to make on this thing. So we were talking about the other day trying to catch a bid down here in the utilities, trying to bank a long trade off of this. Again, the the FOMC stuff is this is a kind of a rate sensitive ETF to say the least. But we talked about trying to base a trade off the unfair lows there at around 50, 59, 50. I think if you did this trade, you got to be kind of willing to just clear the deck right now until this rate situation is over. There was another stock that we were looking at. Let's see. Oh, I know what we're doing. Downtrend reversals. Oh, I'm sorry. Downtrend resistance. Okay. Wait. Hold on. I'm sorry. Kimco Realty, I just want to finish up with this. We talked about on that weekly just being having a really strong signal around 24.5. This stock really lost since we talked about it. I guess about, let's see, how many points is that? 4 points. Yeah, 15 to 20% lost its value since Tom and I were talking about these kind of writings on the wall things. But as you look at this, and it was one of the only stocks in the financial sector that was kind of showing, and I want to show you that. This is what I was going to bring up here. So as I'm looking at the ETF, where's the financials? There we go. I had this up and I was looking at daggone it. I'm having a brain fart here. Sorry about that. Let me clear the deck again. Let me just go back to Kimco. It was one of the only stocks in the financials that was really showing that type of weakness. But yesterday you had a pretty good rally here. You had a new profile attempting to appear the day before, and then this happens. So these are kind of signs. We don't talk about finding low prints or high prints all the time using these profiles, but when you have this, you got to be willing to take some off. This is a good way to save some money on the short. But now you're kind of coming back up into 22.38, which again, I know you're like, wow, this thing has just come off tremendously. Why would I be shorting this? Here's the long term on the daily, but you might have a little bit of a short opportunity, believe it or not, again around 22.38. We're gonna have to see how this stock opens. It's not open yet, but again, dead cat bounce, new profile. Could attempt to whack it again here. Let's take a look at American Express. Got a little bit of a cold this morning. It's amazing how that affects your brain. Here we go. American Express. So, we had last week this. I've been a pretty big fan of this stock. I've shown it a lot. I've talked about it being the strong of the strong. We could see 76.05 just to complete the fair auction down. A lot of these financials are probably going to hold a bid, but it doesn't mean that they can't back and fill, still staying in an uptrend. So 76.05 would probably be the back the truck up type area for AXP. Let's take a look at Citigroup. All right, so another, banking stock. Let me get the right time frame up here. This is the weekly in Citigroup. I don't know why is it not holding the weekly? Somebody's out to get me. Here we go. I feel that way every day, Jay, by the way. 61. I mean, this is pretty incredible that nothing's really backing off too hard here on the financials, and but you could have some kind of sell the news situation. But these are not the shorts that you could focus on. You want to let this thing happen this afternoon. I think there's going to be a lot of adjustment of positions. So if you're day trading, you might get some kind of range bound action today in a lot of different stocks. But really, no way to take a long term position before what's happening here. Here's the S&Ps. Here's the major inflection points to be aware of right across the board, daily, weekly. Had some things change on the short term lately, but let's take a look at the S&Ps again. And it's amazing for me to say this, but I think all hopes could be put on 2343.5 down here as just the incredibly massive pullback that now that we're looking at the S&Ps, and this will be a massive pullback on a relative scale now. 2371 is kind of your big number there. We closed below, kind of retested a couple of times, can't seem to get back through it. We may get a chance to just kind of back and fill down to 2343, so just be aware of that. But again, I'd let this thing come out and try to give it a little room. And then you might have a decent risk reward over the next couple of days. The VIX, looking at the VIX, here's the daily. Just kind of still stuck in the mud down here. Still not a, I mean, if you're looking at trading the VIX, you got to be looking at this, I think, only by looking at the options market. It's pretty difficult to try to time when and if that move up would happen, but at some point it will. Let's take a look at July wheat. So it's getting a little dry out in the Midwest. I've been talking to some guys about that. We had a little bit of a wheat bounce that happened and has now kind of started migrating back in the fair auction down below, which is disturbing to me. Nobody planted wheat around here. I mean, nobody. You can't find a wheat field in eastern North Carolina. It's just not happening. So at some point, I still think, this is not a bad trade on the long side, but right now, that 453 on July wheat, 453.5 has been pierced pretty well. And you'd have to wait until we get back above 453.5, in my opinion. Let's take a look at Coca-Cola. So this is one that, kind of gave you some short opportunities up there, kind of rallied back up into 42.40. I think this company's still got a lot of headwinds. Any type of market pullbacks, I think this is the one to be in on the short side. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Okay, guys, here's the XLV. Here's the weekly. Man, what an incredible move up, huh? Here's the daily. Kind of like how this acted up here. Pierced it, got back in the profile. May see this thing relax a little bit, but let's take a look at a couple of stocks in the. This is one that we had looked at. Gilead Science. Incredibly bad action here. Incredible. Let's take a look at the XLV. Let's go into the scanner and let's hit the XLV. Where is it? My brain's in jail this morning. All right, so as we look at this, let's take a look at a couple of things that might be kind of attractive. Just looking across the board, AXLN, let's take a look at that one. Yeah, this is pretty ugly. Daggone it. All right, so so even though we've had a pretty good pullback, it's not been one participating that well in and we've started now breaking down on the weekly. So any type of market pullbacks or sector pullbacks in the XLV, these are not ones to be long, put it that way. Let's take a look at a couple others. This is one that's kind of sitting right at these weekly unfair highs and daily unfair highs. Let's take a look at this, or daily unfair lows, excuse me. So, as opposed to looking at some of those stocks on sale, like Gilead Science possibly, Boston Scientific, the reason I picked this out is because it's kind of sitting at 2 inflection points, top of the weekly, bottom of the daily. So what does this mean? That means we're kind of coming back into like a maximum support area of a stock that's really done fairly well. But these are kind of Custer's last stance type situations. We could dive back in the long-term weekly. Let's pull this up on the eSignal platform. Boston Scientific. So here's that weekly situation that we kind of showed in the scanner right there, and kind of pulling back to kind of the daily noise area here. If the XLV comes off a little bit, you could see this thing kind of have a whoosh sound down, but we're kind of at a precipice here on VSX. So you always want to let the market come to you. And I actually wouldn't be shorting this stock. I'd look at it from the long side. Let's take a look at ESRX, Express Scripts. Here's the daily. ESRX, let's take a look at it over here. ESRX. All right, so yeah, this is one This is our weekly on the SRX. This one looks really super attractive on the short side to me, believe it or not. So we're sitting at the bottom of the profile on a weekly. The XLV has kind of done its thing. Here's the daily. You know, you got some barriers you can kind of shoot for down here. I love how this thing kind of came down to this area and doesn't want to bounce whatsoever. Oh wow, this morning looks like we're trading 65.40. So we have pierced all this. We got some prints out this morning. This one, to me, lay the wood to it on the short side. This is extremely attractive to go lower. All right, a couple other ones in this sector, and you get any help in the XLV, these things are going to, this one in particular is going to come apart at the seams. What else here? Let's take a look at UHS. Here we go. All right, so this one just saying we pull back. We've explored the whole fair auction. This is our weekly on UHS. Now, this is one I wouldn't be looking at from the short side. I'd be looking at this one trying to catch a bid, just kind of a day trading situation, or maybe for a couple of days. A couple other stocks in the XLV sector. Let's take a look at HUM. Humana. All right, so this is the daily. Incredible move up. XLV at the highs. Humana, again, really had offered some great opportunities to try to pick a battle here, but sitting on the highs and just kind of consolidating there, not wanting to really back off this week. I'd have to wait for a weekly close on this stock. Again, this is not your weakest stock in this sector, so any type of pullback in the XLV might pull this back, but any types of rallies, that thing's probably going to do a little bit of a moonshot. Excuse me. Let's take a look at Abbott Laboratories. All right, so here's the situation on the weekly, and here's the situation on the daily. So starting to show some cracks in the armor on this. I mean, kind of underperforming the XLV in general here lately. But, what do you do with it right now? I'd love to see a new profile happen here on the long-term weekly and see where those targets are down below first, and then try to set up a kind of a back and fill trade on the short side. Let's take a look at Microsoft. All right, so here's the daily. 64.11, 64.10 is massive support on this. Here's the daily. I mean, you don't want to be shorting this stock. We've talked about that for a while, since like the mid 50s, and it's in the mid 60s now. Huge market cap, as you guys know, but I like how this thing spins around up here above these weekly unfair highs and that daily number, 64.10, 64.11. This thing can go higher. Let's take a look at Twitter, our president's favorite mode of communication. There's not one person I hear on TV that doesn't, after they, the proponents go, well, if he could back off Twitter a little bit, that'd be great. It's funny. Anyway, here's the weekly. Here's the long term on Twitter, and man, does it look like it's going to do a massive flush or what? Here's the daily. Just amazing, just hemorrhaging money. And if you guys have the Twitter app, I mean, what is going to cause you to ever spend money with that company? I just don't think they can catch up. Johnson & Johnson, let's take a look at this one. This is one where we were offered some chances to buy it again and talked about not shorting it at all. And that's still the case. Do not short this stock. We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. So, as you can see, the market's been getting pretty balanced here on the daily. Just kind of swimming around about half the stocks in the S&P trading within profiles here. Not a lot of edge. Who knows what's going to happen? Who knows what the market's going to do with a quarter-point rise in rates, or a half point would just probably throw this thing for a freaking loop. So, what's my call on the S&Ps? Again, I think you wait for this to come out. We talked about this before, putting some OCO orders in, possibly. That would be an entry and a stop. I think we could kind of pull back into 23.43 on the S&Ps ultimately. China. Here we go. I think we're finally going to start getting a leg back up into 35.21 on the CSI 300. Taking a look at the Nikkei, man, this just really is crowding the heck out of these unfair highs here at 19,680. So I think we'd probably be in order. This is our weekly on the Nikkei. Probably in order here to have a little bit of a relief valve move up on the Nikkei above that 19,680. Then that's going to be new support on that particular index. Let's take a look at silver. That's called a pullback. Wow. And that key reversal back in the profile on the weekly, that's when we said, you got to stay away from this thing. And I've been kind of partial to trading gold. Here's silver, big wide profile up here. This is kind of wild. So I think what this means is this: if you can get back above now 1702, then I think you got a good trade on your hands, because you've got a big wide profile reversing back into that fair auction that's very, very wide. So again, I think you're looking at silver trading a good long trade above that, and then gold got not as ripe a situation on gold, but inflation fears, raising rates, blah blah blah. I mean, that you might have something good on your hands there. Let's take a look at to finish up. Let's just review treasuries. This is kind of a wait and see too. I think we could, believe it or not, held a little bit lower here on these. We could have kind of like a dual bearish action on the treasuries and the markets at the same time, with stops above 123.10 on the treasuries. Of course, wait for that report to come out. Have I said that enough? Wait for the report to come out. Here we go. Here's the on copper. This is one we talked about the other day, trying to catch a bid around this 2.57778. That kind of came true. Got a nice little bounce there. Again, we were kind of waiting for the market to come to us. Nice close last week and nice little move up on copper. And this is kind of the way I run my trading life, is these profiles and just trying to wait for the market to come to you and trying to get some kind of edge. That was a decent little trade on copper that we had. XLE. All right, so kind of coming down finally into this 68.14. I'll see where we got here. Lows 68.62. Those unfair lows are 68.14. Gotten quite close. Could start looking at that as a decent risk reward with stops below 68.14 now on the XLE. Guys, stay tuned for Larry. We'll be back tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.